Hey everyone, welcome back to part 6 of this course. If you already haven't, definitely get into our Discord and definitely go to Momentum's website and get the Trading Bible PDF. I'll leave both of the links below in the description. Today, we are going to be talking about key levels, which are basically your points of interest, and liquidity. I only trade gold. This is a little bit more of a complex pair, but what I'm going to teach you works across the board. And essentially, what I'm going to show you is I don't get too caught up in a key level. Like, I know where the liquidity lies. I know that price can react off imbalance. I know price can react off liquidity levels. I know price can react off supply and demand or support and resistance. What you're gonna find is when I show you my key levels here, a lot of these levels intersect. For example, a break and retest is lit, it ends up reacting off imbalance. A lot of times it'll even be the market rhythm, and you're gonna see the similarity. So rather than getting caught up in, well, it has to react off my supply, it has to react off my support and resistance, I know where price will react. And to me, if I had to be honest with you, like, I probably trade more, my key levels are probably more support and resistance based. And that just comes with the nature of using a fib and a market rhythm. And I'm going to show you what that looks like. So we have a couple different types of point of interest. Your basic support and resistance, which is essentially, this would be a support. This would be a resistance that became a support. Now, you can see how these levels react. In a lot of cases too, people will be like, well, this is reacting off my imbalance, or this is reacting off my moving averages. What you're gonna find is when you get fundamental direction right, a lot of the points of interest intersect. Now, a lot of people get stuck on price has to come down to my demand level, or price has to come down, to this demand level. That's not the case. Price doesn't have to do anything. What you need to know is what's the market rhythm, what's the fundamental direction, what's the technical direction, where can I react, and if the market needed liquidity, where would it go to get this liquidity? So this is why I use what I call key levels. What are key levels? So for me, I'm not against trading off a demand zone. I'm not against trading off a support and resistance. I'm not even against trading off vector POIs. Just to do a quick recap of what a vector POI is, for those of you that haven't watched any videos on this channel, if I get 3 or more candles the same direction, you can see how the colors of the candle change. Those are just imbalance candles. It measures 2 things, either momentum or inducement. So to me, anywhere I have momentum, I would use that as a point of interest. In this case, I could bring it all the way down to here. I don't know exactly where price is going to react, but I know these vector POIs are my point of interest. What I do know is that somewhere in between here and here, I expect a reaction. So I use vector POIs. You can see the reaction here. Now watch this. In the same context, we had a support that became a resistance here. And this is what I was talking about earlier. There's a lot of different POIs, supply, demand, whatever you guys call it, fair value gaps, imbalance. They all intersect, I would say 80% of the time. So that's why it's important to get direction right. If you have a market rhythm, use it. And soon as a trend establishes, you could basically ride the moving averages. And it's more important to read price in the context of what price is doing versus what's actually going on. So what I mean here, like this here, for example, let's say I had a fundamentally short bias. I wouldn't take this, but let's say I did. I have an internal break here. To me, this would have been a valid short if my fundamentals said short. At this point, price came and liquidated the highs. What did we do here? We took out all the traders trading off this resistance. Liquidation. Would my bias change off that? No, it wouldn't. What would I do then? I would wait for this break and I would find my next point of interest, which is my vector candles. So I mainly use vector candles anyway anywhere I can as points of interest. However, almost every time it's a support and resistance, it's supply demand, whatever you want to call it. So that's why I'll use something like that. Going back to our points of interest talk, what do we have here? Once again, I have my vector POI. So what do we have here? You once again have a support, and essentially price breaks out past support, which I guess becomes resistance here, but fails to maintain price action above that. So what would I do if I wanted to buy this and a fundamental said buy this for me? I would buy it above the MAs. Here, price comes above what you would call support or resistance and into my vector POI. So at what point would I be looking to buy this? I would be looking to buy this after this break, and if price came and tapped and under the MAs. So at what point would I be selling this? I would be selling this when this low gets taken out, price comes down and retests. We're now below the moving averages. So this kind of moves me to my next point. What's another POI I use or a key level? Moving averages. I like the best to use moving averages when we're below or above all three. Again, I use 50, 100, and 200 for moving averages. What's important to remember is I always like to check if there's any kind of rhythm. So this reaction came just above the 50. So if the market is to maintain a rhythm, let's check where this reaction came from, just above the 618. So this tells me that if the market's to maintain the same rhythm, I should be able to get a reaction somewhere between the 50 and the 786. If we look here, where does price react? Around the 786. This again maintains a rhythm. This is Friday. I wouldn't obviously take this. I like holding over the weekends. I don't like holding over the weekend when there's a trade war or a lot of volatility. So in this case, I would not take it. So I have another POI I use, and I call it lit. Lit is essentially where order flow shifts. So to give you an example, you have to be going in the direction, and wherever orders shift, I would use basically lit. So here we go up, we come down, we break, you have some kind of internal order flow. On this break here, I would classify this as lit. Lit is liquidity induced trap. It's a continuation only model, meaning you got to pull back and break itself, and the entry would come here. So this is another model I use. Once again, it ends up being a support and resistance. You can see how these levels just intersect over and over and over. So now that we kind of touched on support and resistance, we touched on vector POIs, we touched on lit, and we touched on rhythm, and we touched on basically vector POIs. So what's left for us? Market rhythm, and using the fibs itself as a rhythm to trade off. So there's some rules for that. The fib gives me a level. For example, I want to react from the 382 to the 50. I like if I can find either a vector POI, a lit, a support or resistance in there. If I can't, I prefer that I'm at least riding a moving average. So I like to use more than just the fib level. The fib level is a confluence. What's the actual level? So that's kind of how I would look at it. So for example, let's have a look here. What did we get here? So price here reacts between the 618, 786. Price here reacts between the 618 and the 786. Where is price likely to react next? So let's just wind this back a bit. So this is kind of more advanced, but one of the things I like to pull is the low that actually breaks. And I'm going to go to the first main pullback. So this is a powerful level for me. Now, preferably, I would have liked the reaction here. I don't get one. I want you to pay attention to what price did. We built all of this liquidity. We took everybody out. And what did we do at this moving average? Because this reaction didn't come from the right place, I can now pull this up. So we're closer to the 50 now, but I want you to pay attention what happened here. We hit this MA, and the market essentially built a support. Now, my bias is still buys because we're bullish. On this internal break, I can buy anywhere in here. If I want a confirmation, I'll wait for above the MAs. I can buy anywhere here. This would be my first target. Obviously, I would have to get at least 2.5 or 3 3R. I do believe I actually took this trade. So this is kind of how I trade. You can see there wasn't a key level there, but gold restructured and created one after it liquidated. So the last thing I want to touch on, how does gold get liquidity? The patterns are pretty simple, but essentially sometimes it does it on a higher time frame, sometimes it does it on the lower time frame. You build a little support, you liquidate, you build a little support, you liquidate. So gold likes taking liquidity before the move. Even here, took out the highs, took out the lows. You may have tried something in here. This would have been a valid loss. If price showed you a buy there and you took it and you lost, that's fine. Where can you re-enter it? You got a break here. What's supported? You have a vector POI. If you had a buy bias, you can once again buy here. I think at this point I still had a sell bias due to the trade deals with China and US that I thought were going to work out. Here we got a CPI release, and here you could see where the news came out that Israel is getting ready to attack Iran. I didn't take this initial entry. However, price stabilized here. You have a break and retest here on this internal break. I took this buy and I basically took a position here, and I think we exited around 40 or 41, which actually happened to be pretty much the top of this move. Once again, what do we have? Bullish, fundamentals change, support us. We're above all the MAs. I'm not awake for London, but if you were, this would have been a valid London entry. And once again, going back to POIs, what do you have? You have a support and resistance. You also have lit. What candle broke? Right here. And where does lit run to? It runs all the way to the bottom where my fractal is. So this is actually vectors and lit. Anywhere in here, I can expect a continuation model. So lit's essentially a break and retest. That's what I said to you. I don't get too caught up in support, resistance, supply, demand. I'm like, it doesn't matter. It's all the same levels. It's all the same. Don't let somebody sell you a course and rename it fair value, unicorn, gap, whatever. It's all the same stuff. All the POIs and key levels intersect. I don't care if you use supply, demand, support, resistance, SMC, or you use my vectors and lit, 80% of your POIs will be the same. What's more important than your POIs? Your direction. From fundamentals, from sentiment, and from ranges. Where retail fails is they teach technicals, there's no fundamentals or sentiment, therefore you fail. And if you can have fundamentals and technicals and risk management together, it is only a matter of time before you get consistently profitable. So I don't want to sell you a dream, I want to sell you what actually works. This isn't a $100 Instagram course. This is what makes me money, where I get withdrawals consistently. And if you repeat it and you put in the work, the same thing can happen for you. So the liquidity aspect of this is, liquidity to me is anywhere there's support and resistance and it taps below it or above it, anywhere there's a trend line and it taps above or below it, or anywhere there's a supply and demand and it taps above or below it. Liquidity is super simple. Any daily highs, lows, weekly highs and lows, like it's not complex. Where people get caught up is they think they can buy and sell at every liquidity, and that goes back to our market conditions video, which I think was part 3 or part 4, one of them. In market conditions, we have trending markets and we have liquidity markets. You got to know when to use which rules. So for the next part of the course, we're going to kind of talk about how we apply everything together, how we get into an entry, and what management would look like. We could do a couple of trades I personally took, why I took them, and then we'll probably finish off with how you could create a trade plan and what is your step forward to actually put this into action and get profitable. So I hope you guys really enjoyed this part. Like you could see, I didn't overcomplicate it. To me, they're key levels. I use vector POIs and lit, but they're the same as support and resistance, supply and demand, imbalance, fair value gap. It's really like, don't complicate it. Get your fundamental direction, wait for your structure to align with that, and just get in on whatever levels make sense to you. It's that simple. You know, you don't need all these complex names that have been renamed to sell you something. This works. I know this works. Like personally, I have proof this works. I have others that trade this way that I've taught, and it's not a hard system. It's hard to get the timing down, it's hard to have discipline, and it's hard to have proper risk management. The system itself, this is easy. You could teach this to a kindergarten kid, but the discipline part, that takes a bit. That's what I told you guys. Technicals, they're for beginners. They're really simple. I can teach anybody technicals in the matter of a few months. It's the fundamentals, the sentiment, the risk management, and the timings and the discipline that takes a bit. So yeah, I hope you guys enjoyed this. I will see you in the next part, and that'll be kind of putting everything together, and then we'll wrap this course up. I will see you guys in the next video.